What's up, YouTube? Today, we're going to be talking about how we can utilize multiple volume profiles to spot areas of interest, frame market context, and develop a trade thesis. These are session volume profiles, full session. This is a 5-day rolling profile, and this is a 30-day rolling profile. First, let's take a look at how and why this zone exists. In this particular session, the market found no sell-side interest in this range. Now, I could have marked this entire range as a zone, but the zone would be too wide for me to turn it into something truly actionable. Instead, I looked at the prior session's profile, found a low volume node that coincides with the range, and used that as the area of interest. Bids above, offers below. Moving to the right, we can see 3 days of overlapping value, with the third day, which was a holiday, being an inside day. Day 4 opens, they trap some volume above, price runs down and through the zone and begins to build volume and acceptance below. Let's mark this. Let's go ahead and skip this 1 hour at a time. So they went back through the zone and the market rejected it. Let's continue to the next hour. They're moving back up, back down, and by now you can see the interest is building below the range, not above, but below. Fast forward again, they're still building lower until pre-market. You get an interesting candle, tapered below, poked below the range, went upside of the range, rejected again, still trading in this range below the zone. The market opens, price shoots up into this range where there were trapped buyers, instantly wicks off, goes right back down to the lows. At this point, the market is clearly conveying the message that it's looking to do business downside rather than upside. The next hour goes by, still building below the range, way more volume this time around. But then they rip through to the upside, back above the zone now, with a lot of volume underneath it. Let's use the 5-day rolling as a reference now. This is a pretty balanced profile. The zone is the lower edge, and price still has a decent amount of room to go further upside. Glancing at the footprint, you can see delta turn. Coming down into the low, negative 300, but it starts to flip. Offer lifting enters the market, aggressive tape on the buy side, and it pushes up and it starts to build higher. Keep an eye on this imbalance here, as price tends to revisit these auctions. So as they break above the zone, you see the volume build higher. They hold it, coming back into this volume here. The sell side steps off. The market continues to build volume in this range. Now, something to note is that these 2 1-hour bars are very bullish, very strong, with a strong continuation candle. Skipping forward, we see a pullback into the zone, a little below the zone, and into this zone. This was the imbalance. So the market comes back to trade it, finds a bid that steps in, negative delta, positive 300 coming out of it. A pretty strong candle with another imbalanced zone. So we've got something to work with as a long thesis now. The market trades below the zone, builds volume, rejects the upside, trades lower again, but ultimately goes back into this range. What this zone does is it simplifies the market context. It's either going to accept below this as a range or go back into this upper range. At this point, it really looks like the market has completed doing business downside of this zone and it is now looking to trade back into this range with confluence in this 5-day rolling profile. If the market pulls back and holds this bottom range of this profile, likely it will start to go through to the other side towards this volume node. So let's delete the zone. We'll go down to the intraday action. Again, this zone here is where the imbalance is yet to be filled, right here. We'll replay this at 5x. Price is working its way back towards the zone now, but there is a pretty responsive bid. So let's go ahead and skip this. 5 minutes ahead. So now price is auctioning into the zone, as you can see on the footprint. All you have to do is wait to see if a bid comes into the market. Trading towards the London Open now. We do see a responsive bid that's stepping up passively, reloading. So the selling is shoving it lower, but they're not getting much done. The range isn't really auctioning for more than a few seconds. So let's pause this. 500 lots against the ask. 138 underneath it. A buyer has certainly been located. The only question now is, do they get continuation? Does the sell side step off underneath the big buying? Let's go ahead and keep the replay going. We'll clear the tape, use this as a reference. 650s. As they trade it lower, they don't trade it for very long. Another bid jumps into the market, 109 against the offer in the 650s. At this point, time is working against the sellers. The longer they show an unwillingness to sell below this buying, the more likely price is going to rip, the zone will hold, and the market will rally. So let's continue the replay. You can see a bid stepping up higher now, showing interest higher, reloading higher. And as the offer shoves price lower, they can't sustain it for very long. You can see that these prints are tapered here as they're building higher. Market starts to rally, the bid follows the market, and volume just starts to build higher and higher. So keep an eye on whenever price moves lower, the offer reloads lower. How far do they get? How long do they trade the lower prices? So they're shoving it back down to where the bid was located. Again, the bid still responsive in this range. Again, this is where the bid was spotted, so this will be the key area to watch. Let's clear this tape, see what they do. Instantly, the bid runs price upside. The selling, very weak. Look at these prints. This is the second attempt, and now as price moves up, there's very little offer that's standing between it as the range moves higher and higher. Bid is still responsive, still holding higher. 122 right here against the ask. $82 lots. The tape is being painted right now. Buy side. And they are ripping through any offer. Look at how responsive it is on the pull stack. So ultimately, price trades back above the zone, holds, goes lower, fails to make another low, and starts to hold higher. In this range, through order flow, we locate big buying. And every time the sell side starts to get close to it, and even below it, nobody is willing to sell those prices. So what does that mean then? That means it's time to go through this range and back into this node of volume. So let's keep this going. We'll do a 50x speed replay just to see price move into and through this range. There's the weekly open. They're moving higher. They're still building volume higher. Big selling comes in right here. But what do they get? Nothing. Volume is still building higher to the upside, not lower. And ultimately, they do trade into this node. Very strong 1 hour close. Follow through on this particular bar here that wicked off of the zone going towards the upside. Many confluences in this trade. So I hope that was clear enough. Felt like it was a good opportunity to do a video on how I utilize multiple volume profiles to form a trade thesis, frame market context, and just make sure that I am not on the wrong side of the market if I'm looking to interact with it. As always, if this was helpful, like, subscribe, comment, and I'll see you guys next time. Peace out, YouTube.